Welcome to today's episode on Pa and You. I'm happy to have you join me today. Today we'll be discussing why electricity distribution companies in Nigeria measure loss before profit. Yes, that's what happens. It sounds unusual, but I will be taking you through why this is done, and we'll learn with a metric that is actually used for calculating this loss, why it matters to the regulator, the electricity distribution company itself, and even you, the customer. Let's begin. Why do Nigerian electricity companies measure loss before profit? Often in a lot of industries, they are more concerned about sales revenue and profit. But in Nigeria's electricity supply industry, priority is given to measuring losses. And the electricity distribution companies, if they could real time, they would have been measuring their losses. I'll be showing you why this is and what metric is actually used in measuring those losses, the stakeholders who are interested in the losses, and mind you, you, the customer, you're also affected. But as we go along in today's episode, I'll show you all of this and explain everything using simple English. The name of that metric that is used in measuring losses in Nigeria's electricity supply industry is called aggregate technical, commercial, and collection loss. You can see it's an aggregate, and the acronym used in the industry is ATC and C. In this particular loss, ATC and C, it comprises three metrics: technical loss, commercial loss, and collection loss. And I'll show you where each of these losses come into play and why it is important to the regulator, the electricity distribution company itself, and you, the customer. Now, when electricity is supplied to any electricity distribution company in Nigeria from the national grid, energy is usually lost between when it was supplied to when it gets to your meter as a customer for use. Now, the first point where energy is lost is technical loss. Technical loss comprises losses in transmission and distribution lines. Why is energy lost at that point? When the energy is being transmitted through TCN, the Transmission Company of Nigeria, to the disco's end, energy is lost in the process as heat. Just like when you are charging your mobile phone at home, sometimes when you touch the phone, you discover that it is hot. That's energy being lost as heat. So, in the process of transmitting that energy from transmission line to the distribution line, the energy is lost. Also, when the energy gets to the transformer, it is also lost. It has heat. Sometimes, if the core of the transformer is not properly laminated, or the transformer even has aluminum instead of copper coil, in that case, aluminum coils tend to lose energy more than copper coils. Equipment inefficiencies. If your equipment through which the electricity passes before it reaches the customers are not functioning optimally as they should, energy will be lost. Heat dissipation in conductors too is one of the ways. So these four are the major ways technical loss is recorded when energy is being transmitted from the electricity distribution company to you, the customer. The next one is commercial loss. And these commercial losses mostly from energy theft, meter bypass, meter tampering, faulty or damaged meters, unmetered consumption, billing errors, incorrect customer records. I've categorized this way to aid understanding. Now, let me explain each of them. Electricity theft, simply put, illegal connections. Sometimes people just take their cable and hang it on the wire on the pole and use the electricity. And because they are not, their details, they are not captured or recognized by the electricity distribution company, that bill is not sent to anybody. All the electricity distribution company will know is that this energy was consumed at probably this transformer level, but they can only account for a particular percentage. So all of those energy that whoever hung that on the cable on the pole used, it will not be accounted for, and as such, you cannot bill anybody for it. Now, meter bypass. Some customers might have meters, but that meter is just dummy. They connect their power directly from source straight into their homes and bypass the meter. That way, the energy they are using, because it is not metered and it is not attached to anybody, at least from the disco end, they won't be able to bill for it. And whatever it is you cannot bill for, you can't collect. That's meter bypass. Meter tampering. Again, for meter tampering, sometimes some customers, unscrupulous ones at that, they would engage technicians to come and adjust their meter so that the meter will not be reading as it ought to. That way, they can load all their heavy equipment, washing machine, electric iron, their stove, and all of that, in using that quantum of energy, whereas their meter will be reading at snail speed and wouldn't reflect their actual consumption. Now, faulty or damaged meters. In this case, your meter is faulty and as a result, it's not reading as it should. That can also be lost, especially if it's not reading, if it's reading lower than what your actual consumption is. The difference or variance becomes a loss to the electricity distribution company. Unmetered consumption, people who use power bill, they don't have meter, whether it's prepaid or postpaid. That's a source of commercial loss. Billing errors. For a number of discos, some of them have been able to automate their billing process or digitize it. For the ones who still depend on manual process and use humans to enter their data and prepare their bills, sometimes errors can come in as a result of human error. And if these errors are recording lower figures than it should be, it becomes a loss. That's where the billing error adds commercial loss to the disco. Incorrect customer records. Now, you say you live in K2 and you moved to Ogudu, and the meter you were using while you were in K2, you moved it along and took it to your home in Ogudu, your new home, and you installed the meter there and you were using it. Now, and you didn't go back to your disco to update your record, neither did the disco find out that this particular customer had moved from K2 to Ogudu. The disco would see that you are using power, or whoever is now in that apartment, they will send the bill to that person. But of course, you have moved. And as well, the person who is the new owner will not take that bill because they didn't consume it. Especially if you were a postpaid, even for a prepaid customer. Normally, when you are moving from one location to the other, you're supposed to notify your disco. And your disco, if their meter actually communicates at the back end, they should have seen that a particular meter has been moved from point A to point B. So that's how incorrect customer records can add commercial loss, because the disco will now start sending a bill addressed to you to your old apartment, whereas you are not there. And the last one is collection loss. Collection loss is simply recorded when customers refuse to pay their electricity bills. There are standing debts, delayed payments, weak debt recovery. Customers refusing to pay their bill. You got your bill, you refuse to pay, and you are arguing, or probably you just kept mute. You are going to introduce or make the disco accrue collection loss. On the other hand, outstanding debt is on a monthly basis. Let's say you receive a bill of 5,000 naira from your disco, but on that monthly basis, instead of clearing your bills, you pay only 2,000, and the 3,000 has been accumulating over the last 1 year, and you are not paying. For any month when you have outstanding debt, is actually going to affect the ATC and C loss by increasing it. And that's because your collection loss as the disco would have been increased too. Delayed payments. You receive your bill for June in first week of July, but you didn't pay it. You left it and you didn't pay until probably the disco itself even came to disconnect you, and you were still arguing. For that particular month when they ought to have collected that money and they didn't, it's going to impact them because it will be recorded as collection loss, thereby increasing their ATC and C loss. Weak debt recovery. A disco that has a very large customer debt and has not put in place any strategy or tactics on how they want to collect their money, they are practically increasing their collection losses, because that debt will keep piling and piling up. And if you are not careful, it might become a bad debt. That's how weak debt recovery introduces collection loss. All of these three together is what is called ATC and C loss. Now, let's look at ATC and C loss. How is it really measured? There is a formula they use, and I will simplify that formula to you. ATC and C loss is actually a percentage, and the formula is 1 minus billing efficiency times collection efficiency times 100. In simple words, what does ATC and C loss really mean? ATC and C loss simply means how much of the electricity that an electricity distribution company received and was able to convert to cash. That's the simple meaning. And like I've shown you here, you have two variables or two metrics to be able to calculate them: billing efficiency and collection efficiency. And to calculate collection efficiency, billing efficiency, let's take billing efficiency first. To calculate billing efficiency is simply the energy billed. That's of all the energy, the quantity of energy you received, how much of what was the quantity you were able to bill. So you divide that by the total energy that you receive and multiply by 100 to get your billing efficiency, which is a percentage. For collection efficiency is simply your revenue collected divided by your revenue billed times 100. I'll use a simple example and something that really resonates with us and is very relatable to explain ATC and C. And that thing is water. Let's measure ATC and C, but I will use this example from a water perspective, and I will also not introduce the units of electricity yet for you to get it. Then you take the understanding from this to the electricity distribution sector. Let's look at this question. Imagine you own a shop and received 10 bottles of water worth 2,500 naira, which you sold to customers, but you were only able to bill them for 8 bottles amounting to 2,000 naira. Out of the total sum billed, only 1,500 naira was collected. What is your shop's ATC and C loss? Let's look at this example. Now, remember, your shop received 10 bottles of water. That's the total number of bottled water that your shop received. And that 10 bottles of water, if you sold it, because you actually sold it, you were supposed to get 2,500 naira as your total sales. However, something happened. At the end of the day, when you were counting your till and checking your invoices, you discovered you only invoiced, or your cashiers only invoiced for 8 bottles of water. Where did the 2 bottles of water go? And that total invoice, that 8 bottles that you sold, you discover it was 2,000 naira. That means that you have actually lost 2 bottles. So if you achieved 8 out of 10, you were able to invoice 8 bottles of water out of 10. Your billing efficiency is 8/10, which is 80%. But you have already not invoiced 2 because your total number of water received was 10. You invoiced 8 and you have not invoiced for 2. Probably this 2 is even a customer that came into your shop while they were still shopping, they drank the water and just threw the bottle elsewhere. Or somebody even stole the water and you didn't know. It could be that at the cashier point, somebody bought 3 bottles and the cashier erroneously entered 2 bottles. That loss, that invoicing loss can come from any of such ways. So out of 10 bottles of water, you only invoice 8. And that 8, the total amount you saw was 2,000 as opposed to the 10 and also the 2,000 as opposed to 2,005. And that gave you 80% billing invoicing efficiency, which is your billing efficiency if we look at it using our example. Which then means that the total number of bottles not invoiced is 2 because 10 minus 8, 2. Now, the total amount that you did not invoice is 500 naira because if you had invoiced for this 10, the total amount you should get is 25. But you only found out you invoiced for 8, getting 2,000. So your total amount not invoiced is 2,005 minus 2,000 naira, which is 500 naira. There is now the third part. You have looked at, this is for the invoicing, you have looked at your invoice that you issued. When you now go to collection, you discover that when you counted the actual money, this total invoice amount is, you added the totals of each invoice. That was how you arrived at this. Everything here is about your invoice, not your cash yet. So when you are now looking at your actual cash, you discover that the total amount you collected was 1,005 because that 1,005 is now for 6 bottles. And as such, your collection efficiency, which is revenue received over revenue billed. The revenue received 1,005. What did they bill? 2,000. You were expecting to at least see 2,000 naira in your till because you had confirmed 8 invoices for those 8 bottles of water that you sold. But when you checked your till, you saw 1,005, and that 1,005 was for just 6 bottles. Now, that makes your collection efficiency 75%. I will explain all of this. And then the number of invoiced bottled water that you lost is 2. How? You received total of 10 bottled water. You only discovered that you could tell who you sold 8 to. The remaining 2 you don't know. But when it came to the money, you were only discovering again that you only collected money for 6 instead of the 8 that you have already established you invoiced for. Which then means that the one you actually didn't invoice for, you didn't collect the money for, but you invoiced, were 2 bottles. That then brings another loss. Your total invoice sum, that's the money you did not collect out of what you billed, is now this 2,000 naira minus the 1,005, which is 500. We have now established what our billing efficiency is, 80%, collection efficiency, 75% for your shop. Let's now calculate the ATC and C loss for your shop. The formula for ATC and C is 1 minus bracket, open and close, billing efficiency times collection efficiency times 100, which will now be 1 minus your billing efficiency is 80% times your collection efficiency, which is 75% or 0.75 times 100. And by the time you do the math, your ATC and C loss is 40%. What does this then mean for you, the electricity distribution company, and the regulator and the customer? Like we have said, those 3 stakeholders are impacted. For the electricity distribution company, if we bring what we have learned now on how ATC and C loss is being calculated here now into the electricity distribution company, the only thing we are going to be doing, we'll use the same example, but we will now replace bottles of water with electricity and assume that you can count. Electricity is actually measured in kilowatt hour. That's the unit with which at customer level it is measured. While at the distribution level, you can use kilowatt hour, you can use megawatt hour, gigawatt hour, but let's assume it's kilowatt hour. Now, we are saying that instead of using 10 bottles of water, we are saying the electricity distribution company received 10 kilowatt hour of electricity. The same example, the same flow. At the end, they were only able to bill for 8 kilowatt hour, and by the time they counted how much they collected, the money was for just 6 kilowatt hour. And they ended up with an ATC and C loss of 40%. What this simply means is that for every 100 units of electricity supplied or received by the distribution company, they are losing 40. And no business can progress that way. You can now see why a lot of electricity distribution companies are unable to upgrade their network. If you are losing 40 out of every 100 units of electricity that you received, how would you be able to maintain your network? How would you be able to replace the transformer that is faulty, which the customer has been complaining about? How would you then be able to also even expand your network and ensure that your service in terms of delivery or even assets that you have deployed to deliver those electricity are in top shape? This is where the struggle is really coming from. If you are losing 40 units out of every 100 units of electricity received, it means for every 10, you are losing 4. And for every 5 units of electricity received, you are losing 2. That's where the issue is. And we all saw where that loss comes from. So the collaboration between electricity distribution companies and the customers cannot be overemphasized. Both parties need to work together. On the part of the customer, when you receive your bill, pay it up. If you have any contention, escalate it on time. Let it be resolved between you and the electricity distribution company so that they can better serve you and give you better services. Congratulations! You just learned about ATC and C loss. You now know how to calculate that loss, what it means, and the implication of the loss to both the distribution company and you, the customer. If you are yet to subscribe to this channel, please click the subscribe button, like this video, share it, and let's all learn together. Thank you for joining me. I'll see you in the next video.